We had some early morning action with gold and silver on this last day of trading of 2013. We're going to find out what happened with Peter Hugg on this edition of For Pete's Sake. Stay tuned. And joining me now is Peter Hugg. Pete, thanks for joining me today.
You're welcome, Alex.
So Peter, kind of fitting that the last day of trading for 2013, gold and silver gives people a little bit of a heart attack. This morning we saw some strange movements, sharply down and sharply up. What happened? How did this come to be?
Well, as I've been saying for the last couple of days, this market is nothing but noise. It certainly probably created some heart palpitations this morning. Silver dropped almost $1 within a very short time span. I don't think it was more than 10 minutes. And silver broke from 1940 all the way down to 1867. Gold broke down almost to its double bottom of this year of 1180. It held at 1183. And, it looked like the market was just caving in. And quite frankly, it was a spectator's market, as I've been saying for the past couple of days. Last trading day of the year, some of the people wanting to lock in their capital losses probably hit the market early. And again, a very extremely thin market just pushed the market down through some breakers. And when it got down to that level and couldn't break the double bottom of this year, the bargain hunters stepped in, some of the shorts stepped in and covered, and the market went right back to where it started. So had you missed that half an hour and gone and had a coffee, it would have appeared that the market had not moved at all. It was very quick, down and then right back up again. And I would imagine that the range for today has been seen, and everybody's squaring. That everybody that needed to square is probably done. Europe closes in about a half an hour, and by 1:30, the boys in New York will be going home, getting their tuxes ready for tonight.
All right, Peter, earlier this week there was a report that 1.3 million employment benefits would be cut for Americans in the upcoming year. Now, I imagine this isn't really a big market mover, but what does this do to maybe the American psyche towards the economy?
Well, it could impact to some extent consumer confidence. I don't believe that it will have a major slowing impact on the economy. In fact, I think there's a bill in front of Congress now when they come back next week that will be put to a vote to extend these benefits for at least 3 months, if not 6. So I don't consider it a pivotal news story relative to the commodity market. But again, with these benefits being clawed back, and I would suspect, if it stays this way, that it will have some impact on consumer spending in the early part of 2014.
Now, of course, tomorrow is New Year's Day, meaning that Thursday will be the first day of trading for 2014. Volumes have been light in the last week, of course, because of the holidays. What are you expecting on Thursday and Friday with, in terms of trading volumes, maybe the regular players coming back to their desks and getting on with the new year?
I would think a lot of them will be back. We're still not going to be at 100% volume, but probably closer to 90% of normal market conditions will present themselves on Thursday. Europe will definitely be back. And most of the players in New York are back on Thursday. Obviously, some will be taking the rest of the week off. So the volume will be not full bore, but certainly much more representative of the trend of the market going forward than it has been over the past 10 days.
All right, Peter, well, let's stop it there. I'll let you get on with some early New Year's celebrations. All the best to you, and all the best moving forward in 2014.
Yes, Happy New Year to all the readers and listeners at Kitco.com, and I wish everyone a safe, healthy, and prosperous 2014.
And that's a wrap from Kitco News for 2013. On behalf of Kitco News and Kitco.com, we would like to wish you a very happy new year. Be safe, all the best, and look forward to seeing you next year. Cheers.